Always forget to do that on time. Okay, so this webinar, and sorry for there's been a little bit of confusion because I'm doing another webinar right after this, which is going to be strictly the PowerAlpha mentoring session number 1, which will also be recorded and so forth for anybody who purchased that indicator. But this one is this webinar is just like basically every webinar that I give, weekly webinar on Thursday nights. So that being said, let me go ahead and get the nice disclaimer going. Day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks, and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your broker or RIA for execution, margin, and other capital requirements. Everyone watching presentation adheres to all disclaimers on www.optionhacker.com and www.keenonthemarket.com or the newly www.alphashark.com, which I believe is just being unveiled. But in any event, so I am your moderator for this evening. So tonight, again, we'll just be looking at the trends for the week, looking at some of the macro data that came out. A lot of events I feel like transpired this week. A very busy week in terms of what's been going on overseas versus what's been going on here with the FOMC and all the connotations and meanings behind the possible rate expectations and what sectors that's going to benefit and not benefit. So definitely a whole bunch of things to dig into tonight. So I'm kind of a little bit excited to that. Can't wait to get to some of the PowerAlpha ratings. They really changed quite a bit. We've really seen some negative scores, negative ratings, rankings on PowerAlpha, much more to the downside. So I think things kind of flipped around a little bit this week. So we'll get to that a little bit later in the webinar. So my background, most of you I'm sure are familiar. I'm one of the moderators in the Keen on the Market training room, and I talk about my background all the time. But in case you're new to attending these webinars or new to the trading room, I previously was a risk trader with Bank of America Merrill Lynch, trading ETFs on the ETF desk also. And I talked about this quite a bit today because I always get questions about what is a Delta One desk. I spent a number of years on the Delta One desk at Bank of America Merrill Lynch as well. I think I started back there around 2006-ish. And before that, I kind of worked my way up the non-traditional route to get to the trading floor at Bank of America. I started in operations, the middle office, as they call it, worked my way up to be a manager of the middle office, and then moved on to the trading desk to start as a junior trader back, I believe it was 2006. So not the real traditional route of going to a top tier business school and being kind of drafted out of there, but which is good. I've got a lot of experience. So I mentioned Delta One trading. This is probably the busiest week, and this happens quarterly, but one of the busiest weeks for Delta One traders. What do? They trade futures, they trade swaps on indices. So all of this is rebalancing. We have a big quadruple witching tomorrow, which affects those guys quite a bit. I'm actually very happy that I no longer have to deal with a lot of that work of rebalance, making sure all your positions are rebalanced appropriately for all the index changes, making sure that all your futures contracts are being rolled, making sure all your options positions are appropriately rolled. So it's a big day of managing your risk for anyone who sits on the Delta One desk. And across the platform of trading desks on an institutional trading floor, the Delta One desk is the busiest desk in terms of this week because of the quadruple witching. All right. So that being said, and you guys can all see and hear me correctly and all that fun stuff, right? I haven't seen any questions roll through, so yeah, good. Okay. I got a little radio silence, got scared there for a minute. I started off my career as a financial advisor with Morgan Stanley Dean Witter. That was actually right around the time of the tech bubble. I happened to see that about 1 year of the going to the height of the since the Nasdaq Composite just made a new record today. From when I started right out of school, I was an FA, and it was the year before the tech bubble burst. So I got to see a lot of cool things with IPOs rolling out. I mean, today we had one IPO that we talked about. I remember back in 1998, 1999, there was literally 5 or 6 big IPOs. You just couldn't keep up with them, and everybody wanted a piece of the latest hot IPO. But literally, I mean, it would be 5 or 6 sometimes a day that you were dealing with, and these large IPOs. So quite different than what we're experiencing today. And then I had to live through the of course the big sell-off around 2000, 2001. So some really interesting times. But again, being that we saw a new record and not in the Nasdaq 100, but the Nasdaq Composite today, kind of just brought me back a few years to what I was experiencing back in the 98, 99, 2000 times. And then finally, my Twitter handle is @CFromhertz. I don't usually send a ton of tweets out. I did send out one today talking about we really saw some huge blocks of ETFs go up yesterday, right before, I wouldn't say right before, but a couple hours before the FOMC meeting. Some really large short-term, short-dated positions in EEM, the Emerging Markets ETF. This was around like 40, 50,000 contracts traded. Short dated, all for Friday. We also saw a lot of UUP puts being bought. We saw some XLU utilities being traded. I mean, these all worked if you followed them pretty heavily. I caught a couple of them. I caught the GDX the day before and made some profits on NUGT. So we saw some unusual option activity going into FOMC with NUGT, which is 3 times gold miners. We also saw a big call buyer that I talked about in the room in GDX, which happened actually the day before the FOMC, but I talked about it, caught it, and was able to profit from it. So some really nice stuff, some really interesting positioning that happened. You didn't see it too much. You can't see my screen? You guys can see this, right? Cool. All right. Every once in a while, there's always someone that can't see the screen, but you should be able to see this. And I see a lot of people are confirming yes. So, I think we saw a little bit of positioning, and that's why I really like ETFs and why I got into ETF trading is because you can really put on any type of position, whether it be in currencies, commodities, interest rates, sectors, macro indices. And I think single name flows were a little bit quiet. We didn't see any huge, big, chunky flows going into FOMC, but you did in ETFs. And all those trades that I just talked about, they all worked. I wasn't lucky enough to catch them all and take them all. I was kind of combing through this morning just to see what was the really unusual option activity in ETFs, and sure enough, there were some big hitters from yesterday. So again, that's really why I like ETF trading. It allows you to really position yourself for events like FOMC, any type of macro events, Greece, and so forth. But anyway, let's get over to the weekly recap. So. I almost feel like it's almost if you read my newsletter this weekend, I made a nice reference to one of the Yankee greats, Yogi Berra, because one of his great sayings is it's like deja vu all over again. And it seems like every time I do this weekly recap, I look at S&P, and it's been a change, the 5-day change, and I took a snapshot of all these probably a couple hours ago, so it's up to date. Not the close, but pretty close to it, and I don't think we had any major deviations from that. But every week, the S&P has been, either flat to up 0.5%, down 0.5%. We just haven't seen a lot of volatility. We've been very much stuck in this range, which I drew this and talked about this as well in the trading room earlier today. But you can see this channel that we're going through. The only this green line is the 100-day moving average, which almost has been acting like a trend line because we keep bouncing off of it. We've bounced off of it many times now. If you just talk about the 100-day moving average, it's going back to February, once, twice, 3, 4, 5, 6 different tests of that 100-day moving average. So quite interesting, and it seems like every time we get there, we bounce. We actually hit it twice this week, and then moved up nicely. And then without an upper band, withdrawing one in, drawing a resistance line in, how many times have we hit this since February? Once, twice, 3 times. So a little bit less, but it looks like we could be headed there. And we're still very much in a chop zone. Trading back and forth until we figure out a catalyst to get us higher or lower. So Stan says, I can't see your screen. I think everybody else can. I'm not sure why you're having that issue, Stan, but so let's move on. So that's where I see what we're doing, back and forth with S&P. And what I like to do, since we've been doing this move, and I've just kind of picked up on it on the last couple of weeks, when we get down to the bottom range, I sell credit spread in SPY. This is not rocket science, but until we violate one of these trends line, I'm going to continue to sell out of the money, either a call spread or a put spread. So, if we rise again tomorrow, I'll probably be looking at credit call spreads. I looked at them yesterday. The risk to reward wasn't there, and in hindsight, I would have picked my strike above this red line anyway, but there wasn't enough risk reward to do that. So just looking back at just going back to the presentation, small caps, I see them extremely strong. I've talked about them on the PowerAlpha. I've talked about them in thanks for confirming. Yeah, so most of you can see the screen. I'm not sure why some people can't, but so you'll just have to listen to me. Do I think today? So yeah, so feel free to ask questions as we go along. This is an interactive webinar. So Rick asked, do you think today was a catalyst in assuming that Greece finally agrees to terms? I mean, we've got another emergency meeting. The Greece rumors are flying. That's one of my bullets down here. I think with the Fed being as dovish as they are, I think that there was a combination of things that helped us rally today. Number one, we didn't really rally too much yesterday after the FOMC meeting concluded, which is a little bit of a head scratcher, considering it was definitely, I think, more dovish. Yellen is still very data dependent. So that was the main takeaway, but it seems like she's really listening to all the signals that are out there and not going to be too speedy with starting the rate increases. So again, I think she's still very dovish, and the market likes that. The market rallied because of that. I think also the economic data that came out this morning was also bullish. There was the Philly Fed manufacturing. The manufacturing data has been pretty awful lately. It's been to the downside. We had, and I have this here, the industrial production, Empire manufacturing. That started the week off on a negative tone, off on the wrong foot, along with coming into the week with no grease deal. So that kind of poured salt in the wounds. Housing starts were negative, however, building permits were up, so a little bit of a mixed signal there. And then today we had a really strong Philly Fed. The market likes these little regional manufacturing data, I find. And so that was way above expectations. CPI also rose, which I think at this point you want to have a little bit of inflation in the market rather than the other way. I think people are so scared about deflation. And so that a little bit of inflation, I think, is good. So, today's positive economics kind of kicked things into high gear, especially the data that was released at 10 o'clock. So that kind of, just we moved from, let's say, third or fourth gear to fifth gear today. But the Greece is still out there. I think they're starting to realize how important it is for both sides to make an agreement. But anyway, there's still rumors at this point. What else? I talked about the new NASDAQ record today, the one thing I still find a little bit concerning is TLT continues to sell off. Not a huge sell-off this week, but it seems like any rallies get faded, which I believe we had a little bit of a rally in the middle of the week, and then today and yesterday, TLT sold off. Long-dated bonds sold off, and rates have been rising. Yeah, so we're getting close to that top, whether we touch it or not in the S&P, that remains to be seen, but it looks like we're definitely headed there. We closed pretty close to the highs, not right exactly that much, but, could be a little bit whippy tomorrow with a lot of with quadruple witching tomorrow. Is it usually a challenge? So Judy asks, is it usually a challenge to trade during triple witching? Well, I mean, there's definitely liquidity in the market. There's a lot of moving parts. There's a lot of things going on. There's a lot of movements going on. So I don't think it's that much of a challenge, but you will see a lot of movers throughout the day. And sometimes you'll see stocks move and there won't be any news. And if that's the case, if you see that tomorrow, that could be indicative of a name that's being rebalanced. All of the index rebalances happen on tomorrow's close. It's all benchmarked to the closing print. All right. So let's dig into some performance for the week, and we'll go over some charts as well. So yeah, I mean, I think it was really a great, nice trending day, Tony. IBB, which was a standout performer this week, this really turned around. I had talked about for a while. I had a really nice profitable trade that I had on. Let's see, what chart do I want to use? Let's go to Bloomberg. Let me minimize this. Let's keep that up in case I need to reference that again. Let's use Thinkorswim. Change my mind. So let me just take off some of these studies because they get a little bit hectic, just so that you can see them on my screen. Okay, so this is ECH, that's not IBB. So we had this really major indecision going on for the last couple weeks in IBB. I took advantage by selling call spreads. I got out of that trade completely in time before this movement happened. But I think this. But notice what happened last time. We had this major spike, but it does look like this is constructive for biotech. I thought we could possibly be forming a triple top here. And you could see this if you bring in Bollinger Bands. I like to look at Bollinger Bands and some other studies on. I flip around quite a bit on different charts. There's different charts I like for different reasons. But you can see that this Bollinger Bands, which I like to watch for volatility purposes, really crunched here. And usually when that happens, you either have an explosion to the upside or downside. Well, we had one to the upside. So I think very positive for the group, very positive for biotech, as well as XLV, the healthcare ETF. So now to the top of the Bollinger Band. So we'll see if we can get a little bit of follow through. I know this has been a very difficult market. A very difficult, I don't know why that's doing that. Let me see if I can change. Some people are still saying they're having problems when I flip from one screen to the other. See if this gets any better. It's like there's probably a handful of people saying every time I switch to a chart, people can't see it. But in any event, we'll see if we get some follow through. This has been a really tough market to trade breakouts. So it's tough to hold positions overnight because you just don't know in this market. Every time we've had a breakout of different times, it's gotten faded. So I've been picking up, and I've talked about doing less swing trading and more day trading, because things have really been choppy. Things have really turned around quickly. Just when you start to see breakout, things turn around. So I'll be really interested to see what the price action is tomorrow, if we get some actual follow through versus turning an about face and going back the other way. All right, so that's IBB. That's also seeing some good movement in REITs this week. So a little bit of I was trying to put some reasoning behind with some of the rate sensitive areas, with rates still climbing this week, albeit not heavily. We saw a big snapback rally today in REITs and utilities. So could be a little bit of short covering. I still don't think anything really has fundamentally changed with some of these, really rate sensitive places. So, I was thinking about fading the rally today, but we'll see. Consumer staples also a really beaten up area. I would add that into the bucket of defensive rate sensitive, higher yielding places. So they also got a little bit of a bounce. So, I think it could be more of a reprieve than a change in trend. And we can look at a couple of these charts, but XLU, maybe got a little bit oversold, but I'm watching my indicators for for a crossover that tells me that this is that the trend has changed. But I'm not happy with this as of yet, and possibly might be looking to fade this rally unless interest rates start to decrease. Gold miners also got a really big bid this week. Gold really rallied. So I talked about some unusual option activity in the miners this week. We saw this not only in the ETF, but also in the individual names. ABX, NEM, GG, they all had unusual option activity. It's really hard to play the gold mining group with unusual option activity, but because there is typically a lot of it, but we did see that all go pretty much in the same direction between the ETFs as well as the individual companies. So what performed, what lagged this week? Again, energy. A lot of the energy names have been selling off this week and last week. So there's 3 energy ETFs that make up the worst performers in terms of U.S. sectors on my screen: Oil Services, OIH, Oil and Gas Explorers and Producers, XOP, and XLE, all amongst the worst performers. Regional banks also took a little bit of a breather this week after heavy rallying. And then you have metals and mining, which has been a trouble spot for the last few weeks. So Joe asked, is there a good source for learning day trading? You're having a tough time swing trading. Yeah, I mean, I'm in that boat too. Swing trading has just been extremely difficult because we're just not trending very much. And if we're trending, it's usually a day, maybe 2, and then we go the other way. So a good source, I would say the Keen on the Market trading room. That's what we're doing all day long. We're putting on a lot of day trades. And, I've been talking about, I think, the strength of the room since I've been a moderator. I've been a moderator for probably now 3 months. Prior to that, you hear Andrew talk about it all the time, that I was actually, I was in the room as a member first before I was a moderator. And what I've witnessed since I've started in both both as a regular member and moderating, is that the strength of the room has gotten very good. We're all kind of in it together. We're all helping each other, pointing out different signals. So I think if you do get into that into the trading room, it will help your trading performance, and will help you learn. We're all in there to learn as well. So, I'm really happy that I'm a part of the Keen on the Market team. I think it's I think it's some really good stuff, and my P&L has reflected that. I've had a really good couple of months. So, I also use the PowerAlpha indicator, and I'll get into that a little bit. I also You'll see, we'll get to the PowerAlpha, but I started, we put that together, Webb and I put that together as a swing trading. What we've actually learned is that it's also a pretty good day trading vehicle. So here's the graphical performance. A good distribution. Again, we're not all one-sided. Fairly decent distribution. A lot of names kind of falling in between flat to up 1%. So overall, I think good breadth in the market. So international performance. India actually got a little bit of a bid. They had some economics out, I believe, that were pretty decent. Russia, so some of the emerging markets got a little bit of a bid this week. And, I mentioned how there was some huge call buying in the EEM, which is one of the largest emerging market ETFs. Huge buying in that right before the FOMC meeting. Some of the lagging, no surprise over here, right? Greece down 10%. That one really fell pretty hard this week. Also interesting is China A shares. This has had a huge rally. I literally talk about this probably every week in the webinar. China H shares as well, FXI falling. We can look at a little bit of, let's look at the chart of ASHR. I call it Asher, which I think many other people do. It's one of the few ETFs that invest in China A shares, which mirrors the Shanghai index. So you could see that we're now falling here on the PowerAlpha. You had a crossover to the negative side. It's still in bullish territory, so I'm not completely convinced that this is the end of the bull ride yet in China A shares, but it's taking a pause, similar to what it did back in the beginning of May. Notice that and this is why I have these two exponential moving averages on my charts. Really when there's a negative, or when there's a crossover, and this is all built into the PowerAlpha as well, but I like to have it on my screens. Notice back in May, we never got a crossover between the faster yellow 5-period exponential moving average and the 20-period. So we're almost at one right now. So I would be looking for this crossover as well in the shorter dated exponential moving averages as possibly a signal that the trend is reversing. You guys can still hear me okay, right? Someone's saying that there's no audio. Check. Oh, there we go. Perfect. Cool. Thanks. Sometimes I pause too. In the trading room, sometimes I'll just pause and be looking at something, and everybody's like, "Hey, there's no audio." Well, I'm just not talking. All right. So that's what I'm watching for in Asher. Again, this is the China A shares, has had a huge run this year, but for this week, one of the worst performers, down 6.3%. FXI also in the doghouse right now, down 3.1%, and then you have some currency hedged ETFs that underperformed as well this week. So again, kind of a mixed field today for all of the various different country-specific ETFs, with some of the emerging market names doing a little bit better, which has been different. They've been underperformers lately. So one thing I do note is the last few weeks, it's been the China ETFs outperforming, especially ASHR, and all the other emerging market ETFs underperforming. Well, now that's flipped this week. Yeah, China. So China H is, they're Hong Kong shares versus China A, which is Shanghai, which is also ASHR and PEK are the two ETFs in that space. So question about the PowerAlpha. In the PowerAlpha indicator, if the cloud is above the line, it's considered bullish. So anything that, let me just clarify that for you. So as long as the two, first of all, from like the first derivative, if the two trend lines are above, above zero, and these are moving averages. If it's above zero, you're basically in a bullish trend. So what you want to look for is for trading entrances and exits is for crossovers in the moving average line. So that'll tell you that the trend is changing, whether it's changing, complete trend or pausing. So this right now, I would, until it gets into bearish territory, is a pause in the trend. Once it gets into the bearish territory, then I would say we're really changing trends. So kind of like a counter trend trade versus outright trend. What countries, regions does EEM comprise of? So you can always go to, you could always find this on the company's website, or whoever manages the ETF. So in this case, it's iShares. So iShares will tell you the breakdown of the countries. It will also tell you the top 10 holdings. On Bloomberg, it will also tell you. So here is the breakdown. China is the biggest weight, and this is China H shares, not the A shares. That was a big story regarding the MSCI rebalance, whether or not they were going to include the A shares, Shanghai, I can't speak, Shanghai shares, which they haven't decided not yet. But the H shares are currently in there. South Korea is also a big weight, Taiwan, Brazil, South America, India, Hong Kong. And then you have some smaller areas as well. All right. So for commodities, I don't detail this out too much, but the main thing I saw this week was gold really rallied up close to 2%. Silver as well. Base metals has been continue to get crushed. So DBB is the ETF that's base metals. Base metals includes, I always forget one of these, but it's zinc, copper, aluminum, and there's one more that I always forget. But there's 4 of them. But in any event, DBB has been an area that's been another chart that I have been keeping an eye on. It looks like it wants to take out the support. We'll see if it gets to bounce here, but it's got some support right around this 14.5 level. It may say on Bloomberg. So if anybody knows what the fourth metal is, I wasn't going to give away any courses, but I'm going to give away a free course to whoever comes up with the fourth metal that I did not mention. So give me a second while I look that up. Now I said copper. I said copper, zinc, and aluminum were the 3 that I mentioned. Nope, 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 nope. Don't see it yet. Let me look it up real quick. I don't know if the answer, it may be nickel. Let's see. I should always have the answer before I. I don't want that. All right, here we go. Let's see what it is. Aluminum, zinc, copper. Oh, I thought this has got to be, I believe there was one more. All right, well, no free course. I apologize. I thought there was a fourth. I'll have to give one later, I promise. uh, so I will give, how about this? I will give a course away at the end. I could have sworn there was a fourth medal in here. Anyway, in any event, let's move on. All right, that's killing me. I thought there was a fourth one. Okay, so what else? So rates, Interesting, a little bit of inflation this week. So TIP is the Treasury, what is it, inflation protection ETF. That was up 0.7% today, this week. And TLT was down 6% for the week. Interesting that the 7 to 10 year actually rallied a little bit. So a little bit, yeah, tricky questions with no correct answer. So sorry about that, guys. I will give away a course at the end. My apologies. And then in currencies, we had, so the US dollar really sold off this week. And I think that's why if you go back a couple slides, some of these ETFs, the currency hedged ETFs, didn't do too well because the US dollar was down 1.2% this week. So interesting, you would think that the euro would have sold off a little bit this week with all of the hoopla around in Greece, but the euro was actually up 1%. So possibly, maybe people were positioning too much short the euro, and there was a little bit of a bounce back. Okay, so let's get into the PowerAlpha. So let's get into the PowerAlpha indicator, because the next part of the webinar, I usually go over what the ratings are to kind of, to give some insight into, possibly what sectors are strongest right now in terms of technicals, as well as countries, and as well as macro related indices. Okay, so first of all, what is it? It meshes together seven different technical indicators. And why did we do this? Why did we put this together? I like to see, as you can see me kind of bounce around between different charts, I like to look at a lot of different technicals. I like to look at MACD, I like to look at Williams, I like to look at RSI, and as well as I like to look at the Ichimoku cloud. I also like to look at, so all these that are on there. And what I'm looking for particularly, and what I was doing previously is looking for when a lot of these are converging at the same time. It makes the technical signal, in my opinion, much more powerful when a lot of these technicals are all converging, telling you, hey, things are going bullish, things are going bearish, momentum is picking up, or picking up to the upside or picking up to the downside. So what we did was we put together a system that allows you to see a particular rating to tell you how strong those 7 indicators are lining up all at the same time, and which will tell you, number one, what the rating is, and number two, if it's starting to pick up momentum. So it'll say whether it's rising or falling. And you also will see this on a chart study, and which will provide you with trading signals. Okay, so big flip around for SPY. Last week SPY was a -5, now it's an 11. IWM have been talking about this relative strength for probably the last good couple of weeks. If you received my newsletter, certainly been talking about for the last 2 weeks in the newsletter the strength in IWM. So not much of a change, a +10 to a +11, continues to look very strong. MDY midcaps joined the party this week. They were +7 to also +11. So things have really flipped around quite a bit. Big move in gold, had talked about that as well, but the indicator is telling us that the momentum is rising there. TLT, kind of interesting. It got a little bit less weak, so still on the weak side, but has gotten a tiny bit stronger. So I don't think we looked at TLT yet on the charts. Still kind of, and note we saw this pattern about, about a month ago, where we rallied a little bit and then faded. So again, no crossover here in this exponential moving average. And notice how quickly this is telling you for a little bit of an uptrend, and then right back into a downtrend. So this is still in bearish territory, hence the -1. And then you have the bottom of the spectrum, base metals, really negative. I've also been talking about DBA quite a bit. So, I actually haven't looked at, I had this in the one of the charts in the weekend newsletter talking about how this is right, the GBA, which is all of your agriculture commodities, so your soybeans, your cotton, and if you go back to all the way back to 2008, it looks like it's very close to trying to, it is finding a little bit of support. It bounced a couple times here the last couple weeks, but it's very close to taking out this support all the way back in towards the end of 2008, which seems a little bit scary to me. So zooming back in, and notice you have, I believe what is this? The purple line is the 50-day moving average, so that just recently crossed the 100-day. So it's tried to rally a couple times, but it still looks pretty weak to me. So that's one area that I'm also watching pretty closely is the agriculture futures. All right, so that's the ratings in terms of big macro names. Jumping into sectors. XLY looks actually very constructive, now a positive 11 and rising. XLV flipped around. This is the major sectors of the US. So a lot of things really flipped around quite a bit. Moving over to subsectors, of course, biotech moved. XRT, talked about this last week as well. This was one of the best sectors last week. So let's bring up a chart of XLY and XRT. Names like Starbucks today really got a nice bid. So nice breakout here in XLY today. That was up 1.2%, but getting a little bit into some open air. So again, we'll see if we get some follow through. Notice where so this is typically where I like to see the PowerAlpha crossover. For a bullish trade between 0 and 5. So we'll see if we get a little bit of follow through in the XLY consumer discretionary ETF. It's been in this nice channel. So what I would look for is maybe a small inside day to possibly set up for a bullish trade. Maybe a little bit of a decline tomorrow would be a good entrance into the XLY consumer discretionary ETF. All right, so what else is flipped around? Materials flipped around quite a bit. So we're starting to see a lot more positives than where we were last week. So we'll see if we can actually break out. In a couple of these sectors, we looked at IVB, we looked at XLY, a couple of the stronger sectors, they do look like they're breaking out despite what the overall S&P is doing. So a little bit constructive. All right, so I think this is the last slide of the presentation for tonight. I mentioned do have another webinar after this, so we'll go through this for another few minutes and then I'll take any questions that you guys have. So the big change I see in this week, things getting a little bit more positive than where they were for Europe. So, the whole Greece, I don't want to call it debacle, but the whole, what's been going on in Greece has really been weighing over like a dark cloud over Europe. So things are starting to look a little bit better. There's still the PowerAlpha is still saying falling for a lot of these, but it's not as bad as it was last week. So things are perking up a little bit. I would keep your eye on as Greece continues to be in the headlines. If you look at the intraday chart for EWG, if you're looking for, instead of watching CNBC, you can basically just bring up a chart, an intraday chart of EWG, which is the Germany ETF, or GREK, which is the Greek ETF. Notice the big green candles today when they thought that there might be some type of resolution today. So this is a pretty big gap. This is from $10.70 all the way up to $11.40. So pretty big move once there was some rumors. So this will whip around depending on whatever's going on overseas. If they get close to a resolution, these are fun ETFs to kind of have. If you have several graphs on several charts on one of your screen at a time. Right now, I would make one of them EWG or GREK, at least leading up into the weekend. Okay, so and there's Greece on the bottom of the European table. So what I found pretty interesting is, and this was the rising was on Brazil. So a lot of the Latin American ETFs are starting to, and countries are starting to flip around. You know, I was talking in the trading room about, you know, I was thinking about taking a swing trade in EWZ. A little bit difficult to do because it's still in a bearish, you know, we can bring up EWZ. This was today's chart, really kind of took off, you know, kind of paused. I was looking for EWZ as a possible day trade. Didn't really, you know, nothing constructive up until about almost till 11 o'clock. Where it just kind of moved sideways when the rest of the market was rallying. S&Ps were flying at this point. So I kind of turned away from EWZ, and it actually made a nice move up today. So looking at the one-year chart, had this crossover here. So it's still in bearish territory, but it's showing some signs of life and has had a nice bounce from you know, where it was you know, bottoming out the last couple weeks. The blue and yellow lines on my charts, the yellow line is the faster 5-period exponential moving average, and the blue line is the 20-period exponential moving average. What is the next webinar? The next webinar is teach-in for anyone who purchased the PowerAlpha Indicator. So what else? So overall, I would say the picture is getting more constructive. So those are the couple things that I'm looking at. I'm still watching China and watching some of the emerging markets. All right, let me open it up to questions at this point. I'm happy to go through any types of charts for the next 5 minutes. So here's a good question. So in the room, I talk about open interest. You've discussed before. So the question is, you have discussed before how some ETFs show low open interest, but that does not mean they cannot be traded. Please go over that again. And is there a way to check whether an ETF is truly thinly traded and best avoided? So that's a really good question. Let me just, and then Judy asked you didn't get the invite for the webinar. I would call just anybody who's purchased the PowerAlpha Indicator and who didn't get the email. You can call the home office in Chicago and just, you know, tell them that you've done so and you didn't get the invite. And then if they're not there, then just email me and I'll see if I can somehow forward you the link. All right, so let's get into the question. Yeah, so it did come, the invitation was yesterday. You should have, I believe it was from John Voorhees. Okay, so let me get to that really good ETF question. So one of the things that I look for, so when I used to trade ETFs on the institutional trading desk, you know, one of the things that scares people away sometimes, so this is kind of going to be a long-winded answer to this question, but it's the best way I can describe it. So I wouldn't always be discouraged by if an ETF has low volume in it, because how an ETF, you have to remember where the underlying liquidity is in an ETF. It's not just the liquidity that's on the screen of how many shares, let's say, I'm trying to think of a good example for you guys. Let's look at, I don't know if this is the best example, but you could see ITB, which is the home construction ETF, trades about 2.6 million shares a day. However, the underlying basket, when a market maker in ETFs trades large blocks of ETFs, they source the underlying liquidity in the basket. So what is this ETF composed of? What's the basket? It's all home builders, it's some retail companies. So when that ETF market maker makes the market, they're actually trading all these underlying names, and they're sourcing the liquidity in those underlying names. So one of the things that I look at, which is difficult, I don't know if you can find this on the company's website, but there is something that's called implied liquidity. So this is the underlying liquidity of the basket. So notice that there's, without going into too much detail about this, but it's the underlying liquidity of the basket that it's indexed to. So so the liquidity isn't just in the ETF itself, but in the underlying basket. So don't always be discouraged by that. One of the things that does frustrate me sometimes with trading options, and sometimes with trading cash, sometimes there are ETFs that you may like. Actually, IHF might be a good one. Okay, so this is sorry to change the not change the subject, but just change gears. This ETF has been all over, not in the news, but there's been a lot of unusual option activity because of all the mergers that have been proposed mergers that are taking in the healthcare, like your Cigna, your Aetna. There is an ETF that tracks that group. It's IHF. And you can see how many shares it trades a day. It's pretty thin. It was only yesterday it only traded 200,000 shares. The day before, only 100,000. However, you can still trade this in cash. Just be careful on how you put your orders in. Don't put a market order in. Put maybe a limit order in between, in the middle of the spread. You often will get filled because there is some liquidity in that underlying basket. So in this case, the implied liquidity of the basket is about 4 times greater the liquidity in the ETF. So does that make sense, guys? So you'll also see that in options. It frustrates me. The options are extremely illiquid in IHF, but if you are looking to take a position in the options, what I would do is, maybe go put your order, if it's a buy order, a little bit above mid-market. You'll be surprised. Sometimes you will actually get filled. And that's because of that underlying liquidity. If the market maker is doing a good job, they're sourcing this underlying liquidity in the basket. And you can see what this is composed of: United Health Group, Express Scripts, Aetna, Anthem, Cigna, and so on and so forth. So what I look at, so the other part of that question, and I knew this was going to be a long-winded answer, but the other thing that I do look at is the open interest. I will gravitate towards, when I'm picking strikes, if there's a bigger open interest, that will help you get into and out of the position because someone already owns a decent amount, and the option market maker may provide more liquidity in that particular strike. So that's why I will look at to see where the open interest is. All right. Yeah, so USO is a good example. I don't want to reveal what I'm going to do too much but I do have an idea set up for USO, whether or not it comes to fruition or not. But yeah, it's been consolidating for a while, so it seems like it's found the zone that it wants to trade in. So I may be out with a trade idea in USO. Is there a website that lists unusual ETFs that you come up with? Well, you wouldn't be surprised how many times people ask me, hey, is there an ETF for this? Is there an ETF for that? I used to get the same thing from salespeople and from customers when I used to trade at Bank of America Merrill Lynch. People would always ask, what's the ETF for this? And half the time, to give away a secret, there's so much on the internet. You can just Google, like if you want to find what that IHF, the IHF ETF, just Google healthcare providers, ETF and healthcare providers, and you'll get the list. Or hey, I want to see what all the ETFs are out there in healthcare. Just simply put that in Google, and you'll get a couple of sites that have lists of 20 or 30 different names. So you'll be surprised. To give away one of my confident trade secrets. How many months do I purchase options? It depends on the trade. It depends if it's going to be a swing trade. I'll usually go out a month or two. So right now we're in July. I'll either look at, depending on what contracts are available and what liquidity is there, I'll really look at, right now we're just finishing up June, either July, August, September. For day trades, I usually look at, if it's the beginning of the week, then I'll look at Friday. If we're, if the middle of the week on, then I'll look at next week's options. All right, so I'm gonna have to cut it short. I will give away, I promised I'd give away a course. So, and then I have to go to the other webinar. But the question, for a free course that you can find on Keen on the Market, again, it's gonna be a free course. Tell me what the ETF is. I already mentioned this earlier and made some really nice profits in this ETF. What is the 3 times leveraged gold mining ETF, the bullish one? 3 times gold mining, NUGT. Okay, a lot of you know that one. So let's see who got the first one. There's about 20 of you who answered correctly. Jenny O'Connor, you answered correctly. So go ahead and send an email to thankyou@keenonthemarket.com once you pick out your course. Do me a favor, Jenny, and CC me on it, just so I can tell them that you are the winner of the free course. But good job, guys. About 20 of you picked that, got that one correctly, but Jenny was first. You can, what is it? Thank you at keenonthemarket.com. And my email is christian@keenonthemarket. Same end of it, at keenonthemarket.com. So Christian at, I'll put mine in there as well. If I can spell right. Okay, so thanks everybody for attending the webinar tonight. Again, I have to cut it a little bit short because I got to go run over to the other one. But thank you again very much for attending. I'll see most of you in the trading room tomorrow. Again, you can follow me. My Twitter handle is @cfromhertz. So I'll put that in there as well. All right, so let me go ahead and close this room. For those of you in the PowerAlpha mentoring session, I'll see you shortly. Good night, guys.